So before I start, again, thank you to Sikich for organizing this webinar and partnering with us. Definitely a very timely topic for a lot of the prospects and companies that we talked to today. Really quick 30-second background on me. So I've been in the accounting space for almost 20 years now. Started in audit, started one of the first Sarbanes-Oxley compliance firms in 2003. And then from there expanded into helping companies scale their accounting operations and introduce um, automation and technology into their organization. So was involved with the first wave of cloud and SaaS. So did my first NetSuite implementation, I think about 12 or 13 years ago. One of the first to implement Avalara and Coupa. And now we're seeing a new wave of technology. And certainly that was the impetus for Gappify. So Gappify is a cloud-based smart automation solution for corporate accountants. So we essentially service the controllership. And really excited to tell you about some of the tips that we've been sharing with customers, and also tips that we're hearing from industry leaders. So really excited that you can make it today. So I think this slide is very evident in today's world. The topic of automation and digitizing has taken the industry by storm, and this really happened in the last couple of years. I'm a very ardent student of the evolution of accounting and technology, and for whatever happened in the last couple of years, there was just a huge surge, and finance leaders saying, "Hey, we need to level up on automation," and accountants actually embracing change. So I think for those that have been in the profession as long as I have, would say that and would know that it's not something that's always been the case. So certainly very exciting that there is now this new wave of technology available to accountants, and it's even better to hear that accountants and finance leaders are excited to adopt it. Now, having said that, as we work with different partners and companies, there is still a lot of white space when it comes to process gaps and automation gaps. So on the left-hand side, if you're an accountant, you know all about this. So we do manual calculations all day on spreadsheets. We go around, ask for data and to confirm information. A lot of that is obviously highly automatable. The right-hand side is a statistic we pulled from McKinsey. The 89% that you see, that first bar, is actually where most of the innovators are focused on. So these are core processing tasks in payments and AP and AR. But as someone who came from the Big Four background and a CPA, the 72% here concerns me and other business leaders as well. And a primary reason for that is your higher costs, ex-Big Four, accounting managers and controllers are really the ones spending a lot of time in this area. And when you think about the types of solutions that have been available in this particular segment, it has just been very sparse. So the handful that I can think of are like the Workivas and the Blacklines and the Flowcasts. There are a slew of automations with P2P, with the Polities and the Bill.coms. So certainly from a Gappify standpoint, we are focused on the 72% here that just for so many years, processes like accruals have not had any automation solutions available to tackle those types of tasks. And accruals is just one example of why there is opportunity for finance. So it's not just mechanical tasks and journal entries. Yes, organizations want to reduce back office costs and want to reduce headcount costs related to low value work. But when you look at this list here, one that is near and dear to a lot of controllers' hearts, and I think for those some of those on the call, is a close cycle taking too long. And now I have the pleasure of understanding why this matters more as a business leader, since I run my own company and I'm obviously accountable to forecasts and making sure that there is good overall financial health in the company, getting timely P&Ls, getting timely balance sheets. A 5-day close is far better than a 20-day close in terms of helping businesses make timely decisions. And this is more so true now with COVID. So CFOs and business leaders need, an AR aging report every day, just so they can manage open receivables. And certainly automation is a big part of being able to get there. So, that was just a quick intro about the landscape. I definitely want to spend most of today talking about, just 3 practical tips. Obviously, we only have a 30-minute session here. You will not, I will not be able to communicate all of the different tips through osmosis in a short session, but as a practical accountant, I definitely want to make sure that there are some takeaways that can be easily adopted. So these are the 3 items here that we thought about: just building solutions incrementally, standardizing processes along the way, and aligning staff to make sure that they're focused on high value tasks versus manual repetitive ones. So we'll drill down into each of these. The big thing I will say within the context of this slide is don't try to do everything at once. I've seen companies take that approach where they get excited about automation. Everyone's buzzing, talking about it. They get support from their management teams. They get a big budget, but they try to do everything at once. That is really typically leads to a longer rollout and longer ROI of the initiatives that are being undertaken. So I am a huge proponent of road mapping and making sure that you get low-hanging fruit and quick wins, and then building on top of that, because as a lot of people are saying now, and it's a cliche expression now, but automation is not a destination. It's a journey. It's something that you'll continually doing, and the organizations that succeed at adopting and welcoming technology are the ones that have just kind of baked it into the fabric of their strategy and business planning. And so this is not like a one-time project where by year-end 2021, you would have implemented a new ERP and all these new like cool RPA solutions. It's not like a single initiative type initiative. It's a journey. So the first tip here is building and procuring solutions incrementally. So P2P is one where our customers always want to attack. Obviously, P2P has a direct impact to spend and cash flow. It's also business facing, right? So it's not just like the back office accountants and AP involved with these types of automations. There's interface with the business, sales and marketing, having to hop on Coupa to do purchase requests. So P2P is huge though. So what I've heard from some of our customers today is they want to go through a big undertaking and strip out everything they have and then just like drop a massive new end-to-end solution. It's well intended and it's coming from a good place, but from a practical perspective, that is not the best way, regardless of how much resources you have to go about implementing a huge cycle like P2P. So what I would recommend specifically here is just start with the point process within P2P. Maybe if you're still cutting checks or maybe manually entering payments in your banking portal, start with payment automation. So we work with obviously NetSuite customers. There are a lot of solutions out there that can help you generate payment files from NetSuite and have it automatically transmitted to the bank. Sikich has expertise in that. But take these pieces one by one, and then of course, from an architectural perspective, you want to plan out and make sure that you have a philosophy that you're holding onto. So I think the prevailing one these days is best of breed, right? So this whole single source notion, which was popular 10 years ago, is now a thing of the past. So it is kind of pulling together the best of breed point applications to tackle different and specific use cases. But if you and your team understand, that's your baseline philosophy when it comes to acquiring new solutions, Then from there, just piece it together one by one. And certainly from Gappify's perspective, so we have multiple products in the P2P cycle. We typically ask customers to just get quick wins with vendor onboarding. So we actually have a demo teed up here at the end where we can show you how our product can help automate that process. But I think when it comes to, especially if you're an organization that hasn't really done much over the years in terms of implementing new systems, starting incrementally is a huge tip for success. Now, standardizing processes is another obvious one, but it is worth talking about. What's fascinating is, obviously as a venture-backed company, I talk to a lot of different investors who's trying to understand the accounting automation space. And a common question I always get is, what's the hardest thing for your customers when they roll out and implement your solution? And my answer is, a lot of times you go into a situation and they are still defining their processes because they're running dynamic human-based processes. Automation requires that you have rules that are followed that can be run through some obviously level of programming, and those rules come from standardized processes, not dynamic ones. But there is a lot of opportunity here, and this is what excites me about automation. So it's not just like implementing a new solution or cloud-based application. It also gives you a chance, and your team a chance to improve and make processes more streamlined and efficient. One of my favorite stories is when we help with a customer, multinational customer on NetSuite, publicly traded. They were fed up with having to write manual checks. So they would have payment runs where they're chasing their controller out of a meeting to get a signature. They wanted to get away from that. As they were rolling out our vendor onboarding solution, they started thinking about the policies that they would put in place to prevent checks in the US altogether. And guess what? Their solution was, well, when Alan, the name of our program, onboards a new vendor, why not just take out check as a payment option? That way everyone is set up on ACHs or, if needed, wires. So there are a lot of great wins to think about as you automate in terms of just making processes better that further reduce processing time. And then, of course, automating new solutions, one of the biggest benefits for the organization is cost savings. But I see automation as also retention. So accounting professionals today, and this is very different from 20 years ago when I first started, accountants who are coming out of school now do not want to be stuck in a corner processing spreadsheets on their own. They want to apply the analytical skills that they learn in school. They want to collaborate with different business partners to help the business make good decisions. Trust me, they no longer want to maintain that 25 megabit huge Excel spreadsheet month in, month out. In fact, I saw that play out specifically with one of our customers. This is a pre-IPO company. They hired a very talented revenue accountant from EY. He soon, within a couple month-end closes, figured out that his job was maintaining spreadsheets and nothing in the analytical side. So guess where he went? He went to FP&A. That was not his background, but that was more appealing to him. So the point here is automation will not only help reduce the number of manual tasks and therefore help provide cost savings to accounting teams, but it will help motivate your employees to really use their brains and their strategic skills to and be able to nurture it. And then COVID, of course, is kind of enhancing the pains associated with manual work. So this is beyond aligning staff to high value work. Certainly from our business's perspective, COVID has put us on in radars of controllers and CFOs, because there is just a high need to do more with less. And again, I'll put on my founder hat. I'm both an accountant and a founder of a company. But as I look to make investments for my company, getting out of the pandemic, of course, the allocations I'm thinking about are going to be more in demand gen and sales and marketing, right? Because I want to drive up business. It is not going to be to hire 3 new people in our G&A back office or in accounting to maintain a big spreadsheet or do manual work in an ERP system. That's just the way things are now. And some of the things that we're hearing from our customers, and this is a good tip for the folks on this call to potentially apply with their own teams. They are now creating OKRs where they are pushing and encouraging senior accountants and accounting managers to develop ways to automate certain traditionally non-automatable type processes like accruals and reconciliation. So that's certainly a shift that is very new within the last couple of years that I've been hearing on the ground. Typically the OKRs and the bonus goals associated with accounting have been around reducing the number of days in a close, or reducing the number of audit adjustments. But now the automation is front and center, top of mind for everyone. In fact, the CFO of one of our customers, they are getting ready to go public soon, has mentioned that hiring is the last resort for them. The first line of defense has to be automation. So this is really crystallizing into very strong statements across the different accounting teams that we're working with. Okay, I know we're short on time, so I'm just going to quickly run you through a quick smart automation example. So we, again, at Gappify, we create various solutions to help automate different processes, not only on the operational accounting side, like vendor onboarding and collections and receivables, but also for accruals. And in our roadmap, we're definitely focused on more technical areas like software capitalization entries and all the deep debits and credit stuff that we all love. But for this quick example, I'm just gonna take you through a quick walkthrough. And of course, there's construction next door to me, so you may be hearing some background noise. Forgive me for that. But what you're looking at here is a NetSuite environment. Gappify Allen is the name of our digital worker. It lives in your NetSuite system. And basically, our customers who run and use Gappify Allen, all they have to do is create a shell record called Connor Corp, for example. Assign this record to Allen, click save. Every 15 minutes, Allen will detect that there is action that needs to be taken on this new vendor. An email is sent. In this case, this is one of our customers, Reddit. So the new vendor gets a Reddit branded email message saying, hey, new vendor, we need to set you up to be not only to get your contact information and bank details, but also to follow our compliance process. They click this form link button. They're taken to a web-based form. They complete this web-based form based on the fields that are needed in NetSuite. There's definitely some compliance-related features that we're rolling out. But some of the things that drive us accountants crazy is the checking of the 10 eligible box here. I'm talking to several customers who are trying to figure out which boxes they check properly or not. They have obviously until the end of January to get this right, because without automation, someone in AP is having to manually make the judgment of whether to check this box or not. But with Gappify Allen, we just expose the field for this vendor, have them identify their legal entity type, and based on IRS rules, we'll determine whether that box should be checked or not. And of course, all the fun W-9 stuff. Our program can recognize different scenarios, and obviously for the US and for Inc. entities, a Form W-9 is needed. So we take all that information back into NetSuite, which we can then flag someone in AP to review. So we are now getting AP out of the business of chasing new vendors for this information, sending an email with an Excel spreadsheet or PDF form saving them from having to then enter it into this new record in NetSuite. And there's a lot more that we can do beyond that to string it along with accrual examples and compliance and InfoSec. So really trying to attack kind of the core processes that as frankly hasn't really changed much in the 20 years that I've been in the profession. So tools like this, we are proud that is creating good value for our customers. But whether it's Gappify or other solutions out there, my overall recommendation is go out there, look for it. Don't worry, you are no longer signing up for a long 6-month implementation for most of the more modern solutions that are out there. I remember 10 years ago when I heard the word implementation, I knew that was going to be a multi-quarter type setup. But for our solution, we have actually an SLA of 5 days to get your sandbox up and running from the time that we have your kickoff meeting. So there are a lot of low code, no code, no IT solutions. Look for those. Obviously, they get you immediate feedback, and those are of course like the more modern type solutions available out there in the market. Certainly happy to connect with people in this call offline to share recommendations in different areas. Look at that. I was really afraid we were going to run out of time. I did want to budget a few minutes for Q&A, so I'll quickly pause now and see if anyone has any questions. Okay. Well,
just one question from the audience. Besides this vendor onboarding example, what are some other examples of accounting processes that Gappify can automate?
Yeah, there are a couple other quick ones, and we do have some time, so I can share those here. So in the same kind of workflow approach, we can have our program Alan detect vendors who have been with you for over a year or 2 years, whatever your cadence is, and have them confirm whether the information you have on file is still accurate, right? So maybe they move and you want to give them a chance to report their address change, or maybe their bank details change. So you want to give them a chance to either update the information or maybe even flag themselves as inactive, which would of course update NetSuite accordingly. So this is all happening without any human intervention. There should just be self-cleansing type automations available like this, because the whole exercise of cleaning up your vendor master record, I have been a part of that. I've had teams like do massive cleanups where they're trying to deactivate 3,000 plus vendors that they've had in their system for so long. This just does it automatically. And then on the collection side, which has been pretty popular for us, especially during the pandemic. So our program, again, sitting on top of your NetSuite system, can identify new invoices. And one of the biggest DSO savers, so to speak, would be just getting in front of issues on invoices before they become past due. So we have a confirmation workflow that reaches out to Reddit's customers a few days after a new invoice has been issued. That allows their customers to review the details that we have in NetSuite, particularly this customer PO number. So for those out there who are servicing B2B organizations, how critical having this information is to getting paid on time. So you now give your customers a chance to report any issues they have through a web-based form. They can select from different reason codes. Then we bring it back to NetSuite. So Alan is running also logic on which issues need to be escalated to different people, which he does by creating a NetSuite task flag to different people based on, again, processes and rules. And so this goes back to the point earlier in the slide about standardizing processes, right? So do you have a collection playbook? And if you do, automation is going to be enhanced that much better. And then, of course, a standard aging report. In the last 20 years, I've prepared a lot of different open AR aging reports, and went around the room to ask different collectors where they are in the collection process. This is now in NetSuite, a real-time report, because Alan is updating all the underlying details associated with it. And then, of course, a cool analytic, a pivot table. This is all native NetSuite, but with all that data stored in one application, we can now show different open receivables and collection results based on different aging buckets, and also reach out conclusions from Alan. Any other questions?